In question 1, you're asked to prepare the closing entry for revenues and expenses. And so since our goal here is to close the revenue accounts and the expense accounts down to zero balances so that we have blank slates to keep track of next period's revenues and expenses, what we need to do is refer to the existing balances in those accounts up here. And so we see that sales revenue and rent revenue have credit balances, which of course is normal because we credit revenue accounts when we earn revenue. So we need to do the opposite. We need to debit sales revenue and rent revenue for the amount of their credit balances. So you'll write the two debits first, and then to close all these expense accounts down to zero balances, we'll do the opposite. We'll credit each of these separate expense accounts, and that's going to zero them out. So we'll go ahead and write all of the various expense accounts and put credits for their existing debit balances. And then when we're done doing that, you'll notice that the total of the debits does not equal the total of the credits. And we can't leave the journal entry that way. So you'll also notice that the total of the debits, the revenues, minus all the credits, the expenses, equals the net income. In other words, we need one more credit in the amount of net income to balance our journal entry, and that credit will be to the retained earnings account. So what we're doing essentially is we're transferring the dollar amount of net income into retained earnings. In fact, that's how net income gets into the retained earnings account, is through this closing entry. And crediting retained earnings increases the account, which in fact is what net income does. Now in the second closing entry, we're going to close the dividends account. Dividends, we know, we debit to increase that account. That's why it has a debit balance right now. So we have to do the opposite in our closing entry. We need to credit dividends to close it to zero, and our debit will be to retained earnings. And that's going to decrease the retained earnings account, which is what we want because that's what dividends do. They decrease the balance of retained earnings.